You are watching Bloomberg Tech Europe. Coming up, it powers the vast majority of smartphones worldwide and a growing share of AI data centers. Arm, the company underpinning the chips used by Apple, Nvidia and Microsoft. Now, the UK-based firm is making one of the boldest moves in its history. Arm is going from purely designing chips to making them in a bid to command AI like it's dominated smartphones. It is a high-stakes shift, but the company's chief executive says it could drive strong growth for years to come.
We are shifting away from being largely known for smartphones to being around the cloud and AI data centers, where in a few years, that's our largest business by far, and in 5 years, it'll be orders of magnitude larger than what we do in smartphones.
So, will Arm's big AI gamble pay off? We put that question to its CEO, Rene Haas. We'll also hear from investors and industry experts on the future of this unique company. Welcome to Bloomberg Tech Europe. This is Cambridge, England, home to Arm, one of the world's most influential chip companies. Arm was founded in 1990 with a radically different vision from Silicon Valley's chip giants. Instead of making processors, it would design them, focusing on efficiency, not just raw power. That low power approach, combined with a licensing model, meant Arm's designs could be used in almost any device and end up anywhere. Arm's model proved ideal for mobile phones, and when smartphones took off, Arm's designs were already built in. Today, nearly every smartphone in the world, from Apple to Xiaomi, runs on Arm-based technology. Arm went public in 1998 in both London and New York at the height of the dot-com boom. 18 years later, it was taken private for $32 billion by Japan's Softbank. Former Nvidia executive Rene Haas took over as chief executive, CEO, in 2022 and returned Arm to the public markets just a year later. This time, Arm listed in New York only, a major blow to London. Now, Arm is making one of the biggest strategic bets in the company's history. The company recently unveiling its first ever in-house processor, the AGI CPU, designed for artificial intelligence data centers, marking a move from licensing into selling silicon itself. From smartphones to the infrastructure powering AI, then Arm's stronghold on global computing continues to grow. Now, Arm may be listed in the US, but it is very much a company with global reach. The company sits at the center of Masayoshi Son's ambitions to take on the AI hyperscalers. Its parent, Softbank, still owns roughly 90%, even after Arm's 2023 IPO. I travelled to San Francisco to speak with CEO Rene Haas about the company's pivotal shift.
So what's happening inside Arm is we are shifting away from being largely known for smartphones to being around the cloud and AI data centers, where in a few years, that's our largest business by far. And in 5 years, it'll be orders of magnitude larger than what we do in smartphones.
For the first time, Arm designing its own chips, its own CPUs, the whole package, and you're working with Meta for this. How significant is that for this company as a strategy?
I think it's very significant. When we looked at the opportunity, particularly in the data center, with the growth of AI, but more specifically agentic AI, and agentic AI quadruples the demands on CPUs, we looked at two things. Number one, this is a market that's heavily underserved at the moment. And number two, customers are asking us, would you deliver and build a chip for us? So to your point, yes, we now have our first product. It's Arm's product. It's the Arm AGI CPU, designed by Arm, built by TSMC, sold to customers like Meta or SAP or Cloudflare, OpenAI, a litany of customers that we've announced. And the demand has been extremely strong.
What is the potential size of this new revenue stream, of this new market for you?
When we look at the royalties in our traditional business model associated with the cloud and AI business, it's about a $3 billion TAM. When we look at the potential of this product line, maybe stretching out 4 or 5 years, it's north of $100 billion. So it is profoundly different in terms of the scale. It puts us in a whole different zip code.
Semiconductors have increasingly become a tool of geopolitics as well. How challenging does that make your role as CEO of a company that has that global scope?
5 years ago, maybe a little bit less, it wasn't something we worried about. We may have had people inside Washington or inside working with people at number 10 to make them aware of the technology, but it wasn't something that was, top on the radar. Visiting Washington or getting to know the folks inside DCMS inside the UK, that was not something that as CEOs that you'd have high on your priority list of things to do. That's all changed.
Do you think governments understand where the real leverage is in the chip stack?
I think they're increasingly learning that. I would say 10 years ago, not so much, but they've certainly added lots of capability in terms of people. If you look at the U.S. government in particular, in the current administration, they've added David Sachs, who is the AI czar, and under David's team, he's put a tremendous amount of capability and people to go off and learn that. Same thing under Peter Kyle and then Liz Kendall in the UK.
And you're stewarding this technology that underpins billions of devices. Do you personally, Rene Haas, feel the weight of that responsibility? Are there moments when you think, wow?
When you're in it on a day-to-day basis, you don't really think about that kind of scale. But sometimes when I step back and when we're talking amongst the teams, we're preparing some materials for a launch, and we try to communicate the scale of what ARM does, and we come up with a number of 350 billion chips. And people like to talk about, well, how many chips does a certain person use? 350 billion chips. There's 117 billion humans that ever lived on Earth, ever, and we're 3 times that number.
That scale is enormous.
Yeah.
One of the fascinating parts of the ARM story is the nature of the business. So headquartered, of course, in Cambridge, United Kingdom, majority owned by Softbank, publicly listed here in the US. How do you navigate having to meet quarterly earnings with Masa Yoshihira's grand sweeping visions of how this kind of tech plays out?
Yeah, I have a fortunate job in some senses in that Softbank, Masa, is a 90% owner of ARM. So I have investor meetings quite frequently with my chief shareholder. But he's very long on ARM, hasn't sold a share since we went public, is very, very long on the potential. So it helps make my job in some ways easier, Tom, in the sense that he has a long-range vision, as do I. Technology, we always know, is a long game. It's not a real quarterly game. So it allows me to have some freedom to think about the long term without having a wide cadre of investors who worry about what's going on inside the quarter. Thankfully, the quarters have been very good, and we've met and or raised guidance nearly every quarter since we've gone public.
What's going on with Stargate? OpenAI, Oracle, they seem to be pulling back on some of their commitments around Stargate, which is this massive infrastructure commitment for the US, but also outside the US as well.
Yeah,
is that starting to falter? Are you concerned about what's going on with Stargate?
No, not at all. I mean, we, Softbank, just put a large investment into OpenAI of the last round. They're going to be using a lot of that capital for more compute. OpenAI is a magnificent company, and I think their growth potential is literally unbounded. Compute is what will limit them. So they're needing more and more compute. There's been a lot written about Stargate, but Stargate is a complex program. I think the noise made around the Stargate thing stumbling has been a bit overblown.
Apple is a big customer, big client, clearly, of ARM. Has Apple lost the AI race, do you think, Rene, or are they going to be fast follower? What's your take?
Too early to tell. We are still in very early days of this AI race.
Where do you stand on the question of AI and jobs? And a company like ARM, are you going to be, in 5-10 years' time, are you going to have more employees or fewer?
The way I think about AI eliminating jobs is when you think about, again, let's use agentic AI as an example, right? An agent can go off and run a job or run a piece of work for you. And one might argue that, that's going to eliminate jobs because all that work is now being done by an agent. But as long as there are people coming up with creative ideas and are imaginative about how to grow, what more can be done, what new product could I design, things could just happen a lot faster. So inside ARM, we are pushing it heavily. I'm pushing it very, very heavily, not to reduce OpEx. It is to design products faster and to design better products quicker and innovate and have more products. Because right now, my limitation for developing great products is the amount of engineers that we have. That is my biggest limitation. And right now, AI hasn't solved that. And it's not to replace the engineers because we've got no shortage of ideas. I've got tons and tons of ideas that we talk about in our leadership team meetings where we look at it, gosh, we'd love to do X, if only. So I'm much more an optimist on this, and I think so long as companies can come up with creative ideas on what to do and build, AI is going to suit us quite just well.
I spoke to ASML's CEO, Christophe Fouquet, a few months ago, and he said he was pretty damning about Europe's place in the semiconductor industry. He says Europe has no real capabilities to compete with the US and with China. Do you agree? Where can Europe compete when it comes to semiconductors?
I think Europe has fallen behind, in this space. I think when you look at the amount of innovation that takes place inside either the U.S. Or China, Europe has fallen behind. I think some of it isn't actually at the big company level. I think some of it is at the startup company level. In other words, companies that can get funding, early funding, do innovation, attract really smart people to go off and build companies and be entrepreneurial. For whether the reasons are there's not enough capital, or that capital is not organized well enough, or there's something that is making founders go move elsewhere. So I don't think it's a lack of talent. I think it's some lack of infrastructure to nurture the companies to start in Europe and stay in Europe.
When it comes to the data center story, when do you think you'll be able to declare victory? What for you is success? You've, again, shifted ARM to have a laser-like focus on data centers to build out that market. When can you call that a win, do you think?
Well, on one level, I think it's a win now in that we've got real customers, Meta, SAP, Cloudflare, Cisco, as I mentioned. So on level 0, it's a win. Going forward, I think there's lots of opportunity to do much, much, much more. The aperture for the opportunity for ARM has just got much, much, much wider. I mentioned north of $100 billion for this AGI CPU product. But if we think about the broader market, it could be north of $1 trillion that we could address.
ARM CEO Rene Haas speaking to me in San Francisco. ARM's move to sell its own chips has been largely cheered by investors. Its stock surged after the announcement on March the 24th. One of those investors supportive of the plan is Clare Pleydell-Bouverie, fund manager at Liontrust. Liontrust's top tech investments include Nvidia, Broadcom and TSMC. Pleydell-Bouverie says ARM's switch to produce its own AI CPUs is a significant moment in the company's history.
ARM is now a full stack provider of the CPU. And what we see time and time again with technology platform transitions is that the lion's share of the economics go to a handful of players, and these are full stack players. Think of Microsoft in the PC era, Apple for the mobile, AWS for the cloud. And ARM has got the software ecosystem, 22 million developers, that's over 80% of the global total. It's got the IP, and now they've got the hardware, they've got the CPU. Now, the key question is what's more important? Designing the CPU first and establishing leadership, think of Intel, AMD, or building out the ecosystem first and then designing the chip. And we actually think it's the latter, because designing the chip, okay, it's hard, but it's not the hardest part. Building an ecosystem takes years. It actually takes decades. If you think about CUDA, NVIDIA's software ecosystem, that took 2 decades to build out. It's got over 5 million developers working within CUDA today. ARM has done the same over 35 years, and that ecosystem is actually 4 times larger. So we think this is very, very important for the ecosystem. It places ARM in a pole position, in our view, for agential AI and AI at the edge.
Is the cost to this for ARM that it can no longer claim to be the Switzerland of the semiconductor industry? Is that a risk for ARM?
This was the key risk. And we think that ARM made the right call because they were essentially trapped. ARM's key customers were downgrading their relationship with ARM in order to pay them less. So moving from pre-designed ARM CPU cores to designing their own CPU cores and just paying ARM the bare architecture license fee. Qualcomm was the canary in the coal mine there with their acquisition of Nuvia. So ARM if they weren't to make this move and launch the AGI CPU, we think they could have seen just a gentle erosion in royalty rates.
Clare, Pleydell-Bouverie, fund manager at Liontrust, speaking to me about ARM's prospects. Coming up, ARM CEO Rene Haas weighing in on the AI boom.
It feels different in the sense that it's just much bigger. So if you think about these cycles, whether it was the PCs going to mobile internet, now going to AI, again, pattern matching is similar, but the scale is unlike anything we've seen before.
We're bringing more from our interview with Rene Haas as he discusses the outlook for AI and his legacy. That is next. This is Bloomberg. As ARM moves into building its own chips, it estimates it could earn up to $15 billion in revenue over the next 5 years. So what does that mean for rivals like Intel and AMD and for ARM's own growth ambitions? I spoke to Bloomberg's semiconductor czar, Ian King, to break it down.
I mean, this is a seminal moment. This is something that's kind of been telegraphed for a while, but it really is. They're stepping over the line and they're really becoming a chip maker.
What does it mean for ARM? What does it mean for the semiconductor industry more broadly?
Well, up until now, ARM has been this kind of provider of technology in the background. Everybody uses them. They're everybody's friend. But now they're kind of stepping out into the light and they're saying, hey, here we are. We're a real company. So some of those previous customers are going to become competition. And they're making this bid. They're making this play for a share of AI.
How do you think the competitors then, and let's start with AMD and Intel, how this impacts them? Does ARM take real market share from AMD and Intel? How do you expect the competitors on that front to respond to this?
I mean, you could say that ARM already has taken share from those two guys, because at one point, the server market, the server processor market was 100% x86, which is 100% Intel's technology. Because of AWS, because of other companies that are actually using ARM's technology, that market share dominance has already been eroded indirectly.
So ARM becomes a chip maker. Yeah. The hyperscalers are also trying, on some levels, to become chip makers themselves. Does this decision by ARM to become a chip maker, rather than just providing the components, does that accelerate the shift by hyperscalers to build out their own silicon? Or does it put those plans on the back burner?
We'll see. I mean, and this will have a heavy say in ARM's future, whether this is the right decision or whether it becomes a competitor with its customers, right? The balance will be decided by how fast it can run, how good its products are. If they're ahead of everybody else, given the demand that's there, everybody will use them still.
And you've charted this company for years, and you've seen Rene Haas take over as CEO and change the focus, change the emphasis, and try to diversify the revenue streams from beyond smartphones, where they have that 90% market share or above. How much success do you think Rene Haas has had on that front? How do you think this ties into that pivot?
Yeah, I mean, there's no doubt there's been considerable growth over the last few years. They're now more than $4 billion of annual revenue, and that's still growing according to Wall Street estimates. So there's no doubt there's been success there. But at the same time, NVIDIA in that period has become a tens, if not hundreds of billions of dollar revenue company. So yes, ARM has done fantastically well and it's been rewarded by the stock market. But compared to what else is available, still a long way to go.
And what are you hearing from investors, analysts, others about Rene Haas as a leader of this business? Are you, how comfortable is the board with what Rene Haas has done and the direction he's taking this company in? I
mean, the only person really that he has to keep happy right now is Massa, right, is the owner of Softbank, who's made this bet on ARM, who bought ARM, put it back in the public markets. So, the numbers will tell us whether Rene is succeeding or not. Certainly what he's trying to do is in line with what Softbank is trying to do. And, if they continue to grow and if they continue to snatch part of this opportunity, and let's face it, they don't really have to displace NVIDIA, right? Just doubling what they're doing, which is perfectly possible within all of these budgets, would be an enormous success.
Bloomberg's Ian King. Rene Haas has spent more than 3 decades in the tech industry. The ARM CEO started out at Texas Instruments and later spent 7 years at NVIDIA. He told me the AI boom is unlike anything he's seen before.
It feels different in the sense that it's just much bigger. So if you think about these cycles, whether it was the PCs going to mobile internet, now going to AI, again, pattern matching is similar, but the scale is unlike anything we've seen before. And it's really because AI touches every facet of human life, every single facet of human life. When you then combine that with the fact that the amount of compute, memory, product that's needed to satisfy that demand, just more zeros. So the scale is much bigger. That's probably what feels different. And also that the impact is so broad.
And you were at NVIDIA before generative AI really had its moment.
Absolutely, yeah.
Did you foresee that technology, the embers of that technology, when you were at NVIDIA? Were there parts of that story that were coming to play?
Absolutely. And again, back to pattern matching. I was at a semiconductor startup before NVIDIA, and one of the things we were working on was voice recognition on answering machines. Now, at that point in time, now when you think about using voice recognition, it's almost an automatic thing. It works incredibly well. Well, back then, the capability of the computers and the technology to actually recognize voice was very limited. But you sort of see at some point in time could happen. So fast forward to NVIDIA, did we know AI was going to be the next killer app? No. But were we investing in areas to allow GPUs, for example, to be used to program for something other than drawing triangles? Yes. So that's where CUDA was born when I was there in 2006 timeframe. But again, AI is not a new thing, right? If you go to Bletchley Park and you take a tour, and you'll see some of the notes of Alan Turing, he has papers in the 1940s, Can Machines Think? So what's old is new, what's new it's old. Again, back to the pattern matching. I'm not sure what we're seeing is very new, but what we are seeing is something that I don't think we thought in our lifetime we would see move so quickly.
A few years back, you told me that one thing that concerned you about AI was potentially humans losing control of the machines. Is that still a concern?
I think the big challenge with AI, to your question, there is the fact that unlike other areas that can be governed that are physical, whether it's around climate change or weapons, AI is a soft thing, right? It's software at the end of the day. So how do you manage regulation around software that is fair and equitable, that can be safety checked in such a way that is going to be fair for everyone? And that's a hard problem to solve. I think the UK has been doing a good job to try and get in front of this. I know other governments have as well. So it is something I think more needs to be done, though.
In 10, 20 years' time, when you look back, what do you hope your legacy will have been in this industry?
Legacy is not something I think about, in terms of waking up in the morning and looking at everything I need to do, and then I look at the Pareto list and say, gosh, should I do that? Because that might impact my legacy in a negative way. I just don't think about it that way. People will write what they want to write about what my life was like or what I did professionally, and that's just fine. I try to do the best job I can in the moment, and the legacy will be whatever it is. It's not something I think about.
ARM CEO Rene Haas. And on the next episode of Bloomberg Tech Europe, we're going to take a deep dive into the race for autonomous driving. Catch that episode on May the 8th. The Pulse is up next. This is Bloomberg.